We are discussing question and answers on fundamentals of base erosion on profit shifting action plans. What do you understand by base erosion and profit shifting? Describe briefly the adverse effect. Okay, so what exactly happened? Why BEPS is so serious in nowadays? So this is another general theory based question that I wanted to discuss with all of you. In fact, we should have discussed this at the beginning of the chapter. We are discussing at the end of the chapter. Okay, base erosion and profit shifting refers to tax planning strategies or tax avoidance strategies, you can say, that exploits gaps and mismatch in the tax rules to make the profit disappear. Okay, so they are doing something that profit from India is shifted, base is eroded or profit is shifted in the tax rules. Okay, profit disappears for the tax purposes and shift the profit to the location where there is a little or no real activity. So they will shift this particular profit to such a country, kind of Mauritius country, where they don't have any commercial activity but tax rates are very low. But the taxes are very low and resulting in little or no overall corporate tax being paid. And this is not done by one or two entities, all major global entities, Google, Facebook, Amazon, Alibaba, everybody. Okay, every big multinational corporation is doing this, and therefore not only India, whole globe is frustrated with this kind of tax avoidance mechanism. So what are the adverse effects? This is little important. Please try to remember it. What will happen if they do this? Obviously, what are the problem that India will face because of base erosion? So government have to cope up with a less revenue and higher cost to ensure the compliances. Government is getting very less revenue from multinationals, and transfer pricing provision, DRP provisions, then advance pricing agreement provisions. We have created so many tax incentives and mechanism to favor multinational corporations in India, and this is what they are doing. Obviously, we are spending more and earning less. This is one of the adverse effect. In developing countries like India, the lack of tax revenue leads to significant underfunding. Underfunding means because profit is shifted, base is eroded, government of India will get less amount of tax, and because they are getting less amount of tax, we are underfunded. An underfunded country cannot become developed country. We need to develop road, infrastructure, education, healthcare. How can you do without having a tax in your hand? Okay, and underfunding of public investment that could help the foster economic growth. The third one is also very, very important. You are making fun of Indian income tax law. Are you taking it as a joke? Okay, you are not taking, you as a non-resident, you as a foreign entity, just because you are having a good, best of the best tax consultant with you, that doesn't mean we will be sitting and watching you evading taxes in India. We have to take some kind of counter actions because you are making fool out of us, isn't it? So base erosion and profit shifting undermines the integrity of tax system, as reporting low corporate tax rate is considered to be unfair. It's completely unfair, but we were not able to do anything. Right now we are making our country ready to fight with this kind of tax evasion practices. When tax law permits businesses to reduce their tax burden by shifting their income away from the jurisdiction where income producing activities are conducted. So in India, you are doing income producing activities. The other taxpayers, please understand, you are shifting your profit to Mauritius and you are not paying taxes in India, but the other taxpayers in that jurisdiction bear the greater share. Because of this, what is happening? Indians are bearing higher amount of taxes. MNCs are paying low taxes. That means Indians have to pay more amount of taxes. You can see Indians are paying now surcharge at the rate of 15%, 25%, 37%. Such kind of huge surcharge we have implemented here. Why we have implemented such kind of huge surcharge rates, more than corporate surcharge rates? Because MNCs are not paying enough amount of tax. If the MNCs started paying enough amount of tax, if they don't do this kind of base erosion practices, obviously government of India will have sufficient revenue hand, and then Indian citizens or other parties who are operating in India will not suffer. Okay, this gives rise to the tax fairness issue on account of individuals having to bear the higher tax burden. The next one is also very, very important. In India, you are having two companies, Amazon and Flipkart. Flipkart is an Indian based company, Amazon is a MNC. Okay, if Amazon doesn't pay tax in India, though the business share of Amazon is more, say for example, Amazon controls 70% of e-commerce market, Flipkart controls only 20% of e-commerce market, but still Flipkart is playing its good role. Flipkart being an Indian entity, they don't have escape route because they have to pay Indian taxes. Amazon being an international organization, multinational corporation, they have the escape route through which they are earning more but paying less. That is completely unfair. You are killing the competition of Indian entities by having this kind of base erosion practices. So enterprises that operates only in the domestic markets, including family owned businesses or new innovative businesses, may have the difficulty in competing with multinational enterprises that have ability to shift their profit across borders to avoid or reduce the tax. Fair competition is harmed by the distortion indulged or induced by base erosion or profit shifting practices. This was the adverse effect. Very important question, my dear friend. I should have discussed this at the beginning, but I have discussed it here. You have to mark it important. Next one. What are the significant OECD recommendation under action plan number 1? We have discussed action plan number 1. Which are the recommendations that has been adopted in Indian tax laws? So whatever we have discussed, everything is simply copied. Modifying existing permanent establishment rule to provide that whether the enterprise engage in a fully dematerialized the digital activities would constitute a PE. So even digital entities should be considered here. Server-based entity, cloud-based entity should also be considered having permanent establishment in India if it maintains significant digital presence in another country's economy. A virtual fixed place of business, cloud, server, that also should be included in the definition of the PE. The creation of PE when the enterprise maintains a website or a server of other enterprise located in a jurisdiction and carries on the business through that website. Imposition of final withholding tax. We are having withholding tax 194.0 for e-commerce operators. Taking into consideration potential new digital economy and rapidly evolving nature of the business operating, it becomes necessary to address challenges in terms of taxing such digital transaction, and that will be taken care by having these withholding taxes. In order to address the challenges of digital economy, Chapter 8 of Finance Act 2016 have brought Equalization Levy that provides 6% of tax on consideration in respect of specified services, which are money paid by R to NR and NR having PE in India. NR having PE in India. So R to NR and NR having PE in India. For advertisement activities, it will be deducted at the rate of 6%. So this is what we have taken care, and because there should not be double taxation, this NR will be exempted under section 1050. Once the equalization levy is paid, your income will not be doubly taxed. These provisions are there in 165. It was already there. Apart from that, we have recently amended the definition of this equalization levy to include even e-commerce operator. So what are the specified services? Advertisement services are provision a place or a platform for digital advertisement. So this particular provision will apply the equalization levy only if the consideration exceeds 1 lakh. If it does not exceed 1 lakh, provision of equalization levy will not be applicable. The Finance Act 2020 has further expanded the provisions of equalization levy, and now we are having 2% equalization levy also in syllabus. This is on e-commerce operator like Amazon and Alibaba who are dealing in India and they are supplying goods and services, or they are bringing the platform where they are facilitating other suppliers to supply goods and services in India. They are selling Indian data because data is also important. If I am searching something on Amazon now, you won't believe, my dear friends, if I search the laptop now on Amazon, Facebook and Instagram will start showing me advertisement. Obviously, there is some kind of data exchange between Amazon and Flipkart and this entity, or Google and this other entities, isn't it? So that happens here. And any purchase of goods by Indians or any other foreigners who is using Indian protocol, Indian IP address, even that is covered. So little comprehensive definition we are having. However, it won't be attracted. The new 2% rate will not be attracted when it is already covered in Indian laws through the permanent establishment in India, and where equalization levy under section 165 is applicable, 6% equalization levy is applicable. Then why should we apply 2% equalization levy, and your transaction value is less than 2 crore rupees. So this is kind of whole revision of equalization levy chapter, isn't it? Next one. What are the ways in which hybrid mismatch, market important, hybrid mismatch arrangement are used to achieve unintended double non-taxation or long-term tax deferral? So what is hybrid mismatch? And this is from action plan This is from action plan 2 that we did not discuss in the original provision because we have to discuss here. Apart from that, let me tell you, whatever is recommended by the OECD to tackle hybrid mismatch, none of the recommendation is actually incorporated in Indian tax law so far. Whenever they incorporate it, we will discuss that definitely. But right now, we don't have any provisions, any anti-avoidance provisions for hybrid mismatch. So what do you mean by hybrid mismatch? Hybrid mismatch means if India is making payment outside India, please understand. So we will give deduction of expenditures to Indian entity, but foreign entity will not make it taxable. Okay, will not make it taxable because it will be exempted in the foreign entity. See, what is mismatch and what is match? First, you should understand what is match. Expense of one party should become income of other party, or if income is not taxable in the first country, then it should at least become taxable in the second country. This is the hybrid match. Okay, hybrid means two parties are exactly matching. Expenses to income. If income is not taxed in country 1, then country 2 at least should take the tax. If this is not happening, okay, expenses here is allowed as a deduction, but income is not getting taxed due to some reasons. In that country, they are not taking the tax on the income which is derived from India. Then obviously there is a hybrid mismatch. That means there is a double non-taxation. Okay, India did not cover the tax by giving the deduction, and foreign country is not collecting the tax by giving the exemption. Here, India did not collect the tax because DTAA prohibits us to take the tax. Apart from that, foreign country is not taking the tax according to their own country's tax rule. So obviously, if income was not taxable in India, at least it should have become taxable in your country. So we need to take care of this hybrid mismatch. Hybrid mismatch arrangements are sometimes used to achieve unintended double non-taxation or long-term tax deferral. You will pay the tax, but you will pay after 15 years, after 20 years. Obviously, that is not intention of the law. In one or more of the following ways. So these are the ways through which they create the hybrid mismatch. Creation of two deduction for the single borrower. Okay, so holding company will take the loan, holding company will take the deduction, holding company will give the loan to subsidiary company will also take the deduction. So this is in different country, this is in different country. So the loan is, see, single loan. Actually, it is only one loan, but two people are, or two different parties are taking the deduction in two different countries. So that is possible. Generation of deduction without corresponding income. So here there is a expenditure, but this expenditure is not considered as expenditure in the other country. One of the example is, please understand, there are instrument called convertible debentures. Okay, some of the countries are considering, see, India consider convertible debenture as a debenture only, and any interest paid on the debenture is allowable deduction. But there are countries which consider convertible debenture as equity, and any dividend earned, so they call it dividend. Any dividend earned in that country will not be taxable. So sometimes they give exemption to dividend income, isn't it? So this is also a hybrid mismatch. One country is understanding the instrument as a debenture, another country is understanding instrument as a equity. Misuse of foreign tax credit is another example. You can misuse the foreign tax credit. You are having a foreign tax credit and you are using it in this country as well as in another country, possible. Because every country will give you the foreign tax credit, and if you manipulate the data, the foreign tax credit can come as a different number. Participation of exemption regimes. Exemption regime, that means you are using the exemption regimes provided by your country. You know that in India we are having 10AA, 80IA, lot of profit link deductions. So you are using the country's taxation exemption mechanism to avoid the tax. So you are neither paying tax in the source country nor paying tax in the residence country. So if this happens, then we have to do a lot of amendments in income tax law. You can understand, despite of these many recommendations and these many action plans being implemented, still there are loopholes in Indian taxation system which are abused and exploited by the foreigners. Thank you.